Another way of gaining exposure to the crypto asset class without actually owning a physical crypto asset is with the futures market. Now, in the futures market, you're not trying to predict the future. You're just buying a security that secures delivery at a known price, time, and date. One consideration in the futures market, if you're investing in physical crypto assets, is what do the term structures look like? And I'll talk more about that in a minute. But just so you know, there are a couple places to buy Bitcoin futures. The first is on the CBOE. Ticker symbol is XBT. Now, the CBOE, one contract represents one Bitcoin, and they allow for 40% margins. The second place you can buy a Bitcoin future is on the CME, or the Chicago Mercantile Exchange. In this case, one contract is much larger. It represents 5 Bitcoins, and the margin is 43%. So let's take a look at the term structures right now of Bitcoin and make some sense of them. So in the futures market, sometimes the term structure can be predictive of price moves. Now, the Bitcoin futures market is relatively new and doesn't have a long time frame of futures available. For instance, here is a chart of the term structure of the Bitcoin futures on the CBOE. And you'll notice that there's only 3 months available. There's March, there's April, and May. And right now, the April contract is trading at 99.40, the May contract's at 99.60, and the front month, which is March, is trading at 10.50. And this is a pretty flat slope of a term structure. Sometimes in other commodities, such as oil or natural gas, there'll be backwardation or contango, and that can be predictive of future prices of the actual physical commodity. But right now in the Bitcoin futures market, it's difficult to determine which way price is going because there is a lack of data and a lack of contracts available to trade. But perhaps sometimes in the future, this will be more predictive of pricing.